Good morning, everyone. It's Chris from Solstice ATR as well as Axel. You can find me on the website, Twitter, Instagram, Discord, and you can DM me. We use this adaptive algorithm for side market, up market, as well as down market. Remember, we're not a broker dealer. Past performance doesn't indicate future results. Smash the like button. Subscribe for the YouTube. The weekly video is for free for you. Remember, I am on the road this week for just a short period of time till Wednesday morning. I will be on the trading desk in the morning. Maybe I'll miss the afternoon close, but the most important thing, just I'll be back at the office by Wednesday. Let's go to the first slide that I have up here. And what I did, I used the market profile on the micro E-mini, which is part of the S&P 500, to show the ranges in the S&P 500 or the E-mini. The volume profile is basically, this is the high, this is the low, this is the value area low, value area high, and the point of control where most volume and contracts have been bought and sold, whether it's an equity, an option, a commodity, or forex or crypto. So the most important thing to understand that the volume profile is on the left. The time spent in the 24-hour range has a value area low, has a value area uh, low, and value area high. But these are the time spent in relationship to the point of control, and the most time spent in 24 hours is in green line. So we had a week on the S&P 500, though the ES or the E-mini, we were range bound in the most important part. And what I can show you here, I showed the last market profile in the last 24 hours on Friday, where the open was, where the high was, where the low is, and the close. The open and the close is basically marked with a box and a dot, but I kind of compressed it so it doesn't show it. But remember, I'm showing here that the closes, that 56.51 quarter is a very important area in the S&P 500 to hold. Let's go to the next slide. This is the 10-day range which we had in the E-mini, and this is the one I usually trade. I don't trade the micros. And the point of control or the volume, I mark them a little bit differently because I use the trading hours separated from the overnight price action and the trading hours that's used in the overnight between the European zone, Middle East, as well as the Eurozone. I separate that till the market opens up on in the New York Stock Exchange, which is 9:30 till 5 p.m. on the commodity and 9:30 till 4 p.m. for the equities. Some equities and ETFs trade 24 hours, but I wanted to separate these to show you where the value area high low is. In here, you can see the 24-hour, which we did in the prior slide, is just here, value high, value low, and point of control. And the time spent on Friday was actually the same as the point of control. But if I take the high and low, my 50% is below the time spent. So the sentiment is higher coming in Monday. The sentiment is higher coming in Monday unless something comes out of the tariff, European zone economy data or something. On Monday, there's no data coming out, so pay attention to the market profile. We were range bound, and if we get a gap up and continue higher. Let's go to the next slide. And what I did here, I use the Fantastic 8. I don't call them the Fantastic 7 or the Mega 7. I have included in there Netflix in the profile. And you can see that this consolidation from November 4th, when we broke out and we had that double top, we are consolidating above the 200 SMA. That's the 250. That's the 116. Are we going to get a breakout in the Mega 7 or the Mega 8, Fantastic 8, including Tesla? And I am paying attention to Tesla, Google, and Apple. Tesla is in the formation of a breakout, including Apple. Let's go to the last slide. Remember to check us out at Solstice ATR and give us your commentary, share with your friends. Let's go to the first slide that I have up here in the S&P 500. I put the Nasdaq 100. You can see in the Nasdaq 100, we had that double top here and we fell back down. We are in consolidation in this range. I know this time, I don't know what Thinkorswim did. They added the volume on the large contracts and they took them off, and here they have them off. I don't know what if there's a glitch in the data or they just took it off without including that data in the profile. You can see we had 9 days, we had that double bottom almost. We've got if you consider this candle is 1, 2, 3, 4, 5, 6, 7, 8, 9, including that down move down. If I can clear those three tops and I can clear the 250, I'm looking for the 18 and the reversal back to the F3, which is a 38.2 fib on the Nasdaq 100, while the RSI is trying to climb back up. Let's take a look at aapl. I'll do the equities first and hope this is working. Okay, there it is. I know I got a little bit of data here on Apple. There it is. I have the linear regression that we fell down from that channel. We are consolidating. You can see that large volume reversal back up after the consolidation for the 5-day. This is Friday, Thursday, Wednesday, Tuesday, Monday. I consider this is an uptrend in a wedge. It's a double hook unless some major event happens and Apple cannot clear this area and clear the 219 area is very important, 220 in order to continue higher. This is Apple setup. Let's take Tesla, and I'll show Tesla here. I can see that Tesla in the last couple of weeks, everybody's beating it up. I know the problem is because due to economy, global policies, as well as domestic policies, as well as government, people beating Elon. The company is great. It's a technology company. It's not a car company. But most people beat Tesla up. What has Tesla done in the last 8 days after that large drop? You can see consolidated, bottom down, went higher, fell back in, but this is a higher high, higher low. And what I would do is do a linear regression uptrend channel on it. You can grab this point, control point to this point, and I'll make it into a solid line, edit the property. We'll make it into a solid line. We'll make it yellow so everyone can see it. We'll keep it set up that way. So we are in a uptrend. Once Tesla clears this big engulfing candle in these two highs, you can see that this high on the candle was 253.37. If I do clear it and I clear the backside of this channel, I think this is going to clear the 200 SMA and eventually get back to this candle that was up here. Everybody's being bearish on it. Pay attention to it. Let's take a look the micro NQ, and the reason why I'm going to use the micro NQ to show you how to do the measured distances. If I take this recent high to this low down here, we had a 14.25% decline. After that, the consolidation, if I come into the Friday close from 14, we are at 10.5. Are we still in a bearish tone? Yes, we are in a downtrend trying to break out. This consolidation in the last 5 days, if I do clear this downtrend channel and I break up to F3, F5 is in play because this is the backside of that breakdown on this candle. So that's important to pay attention to the micro Nasdaq 100. I will SPY to to do the measured move. And if you have questions, I want to keep this video very short and brief. So this is the S&P 500. We can see that in the S&P 500, if I zoom in here, once again, we moved down, we looked up, and we're creating a higher high, and Friday rallied back up. I have to clear this area in the 200 SMA and F3 in order for the momentum to change and shift. If I draw a from this high, if I grab this high to this low, this is a very important channel. Or even if I grab this candle here to here, I want to pay attention to this level and this candle here for the breakout on the S&P 500. So let's go now, do the measured move on the S&P 500. I'm going to go to an intraday. This is the Fortune 500, so I'm going to use it. Let's do a 30-day range. And we're going to use a 6 hour instead of a 4 hour. I sometimes use most of it 6 because it's 6 plus 6 plus 6 plus 6 makes 24 hour. If I use 4, it's a little bit different, but I'm going to show you how to use because most people use 4. So the week we had a wick up. Remember the contract changed to the M contract. So if I take this high to this low on Sunday, this is the Friday, is that the Friday range? That's the Friday. So we can take this high to this low here, which is, this is Sunday. Okay, we can zoom in. I just want to zoom it in to make sure we got the right information. So I'm going to go get the measured move. This is the high for the week. This is the Friday low, so my Friday was the lowest for the week. I'm gonna extend this to edit it. I'm gonna extend it to the left so everyone can see it. We're gonna go to 3-1. Okay, everyone? 0-1. And I'm going to extend it to the left. If I zoom down, you can see that the breakdown was from this area here, this candle here, because we had this consolidation. We fell down, we tried to rally, then this candle took us out, that big, large engulfing candle. Coming back to this area and that wick, there's some kind of a contract here that has a wick up somehow on the SPY. It might have been an option settlement. Something was there. It didn't settle. You got that large wick up. So if I take this without it and I measure this independently, I'm going to activate it to show you that this wick, even if I use this high here to this range and I extend it to the left, edit the property, and I extend it to the left till March 1st, 01. And I'm going to show you that this 200 SMA, this candle is very important coming back to this area here in case the momentum is up. If the momentum is down, it's vice versa. Let's take a look at the QQ. And I want to show you the QQU for one reason. It does not have that wick. So this is why sometimes there are glitches in the software or in settlement on dates. So I want everyone to pay attention to these levels. I'm going to take this measured move out of here, remove the drawing. So no longer valid. And if I take this range, we're in consolidation. If I do get a breakout, I'm looking for this candle to be taken out. So I'm not biased to either side. So we're going to trade what we see. Let's go to the S&P 500. I'm going to show you the S&P 500 with all this noise that I have in it. I'm going to break it down for the last 10 days in here to show you what I'm looking for intraday. I'm going to go to the 10-day range to show you that this consolidation after this move down, we rallied back up, but we had an inside range because this was the prior week down move after this candle down. If I end up breaking up, and this is the market profile, the weekly profile. If I take this out of here, okay, I'm going to remove the weekly measured move. Okay, you see it? This is my weekly high, my weekly low for the week, including Sunday. So if I'm going to get a breakout, I'm looking to break out of this area here. Oh, this is the combo. Sorry, this is the combo. I'm using the combo on my fault. Where is it? See, sometimes when you're not paying attention, you add something, you remove something. You can see the weekly range between the high and low. I did not extend this to the left side, so I'm going to edit the property and I'm going to go back to the 15th. This is the 15th, which is Saturday. So this is the range. This was Friday's candle. So if I'm coming back to this area and I hold this 51 50, 75, 51 quarter because this is like a triple bottom 1, 2, 3, including the Sunday night, and I rally back up. I'm looking for the extensions to the upside, which is the 200% and some. The other yellow are the measured move on the monthly, on the micro. So what I'm going to do is micro ES to show you how to do this. You can see I marked these in the prior weekly video. So you can see this is a head, this is a shoulder, this is a head, this was a shoulder. I was expecting a shoulder formation, but what did we do on Sunday? We gapped up, we didn't create a shoulder, we came back to a 1, 2, 3 bottoms and rallied higher. So this is an inside range. If I can clear this high here, and if this is considered a shoulder, head, shoulder, if it doesn't make it to the top and it breaks out, I'm looking for the breakout. So either way, we're going to trade what we see. We're going to move this one here because this was the prior remove. We're going to remove this head and shoulder out of here because these were the double bottoms. If I duplicate them, that's a double bottom with the overnight. They were identical. If I can clear the 57, 60 areas to 70 area, there's going to be continuation to the upside in the S&P 500. If you want to learn a little bit more about market profile, understand the supply and demand, gap up and gap down. This is considered this is one distribution, this is another time spent. This is balance 1, 2, 3. This is two distributions. This is two distribution was a rally up and the time spent was higher. If I take the high and low, my measured move, my 50% is below the time spent. So sentiment is higher. Even in this one, when we came back down, because the point of control shifted lower, but the time was higher. And you can see that the time was trying to develop here, but the time spent was higher. We gapped down and we rallied back up into the range. So we had 5-day range. I'm expecting a move up on Monday. If you have questions, please get in contact with us. We're here to help.